Dr. Barry, where have you been? Well, it's just been school, bro. I had a lot of schoolwork, I had exams and stuff. So I had to finish everything and, so I can focus properly on the charts. And finally, summer vacation is here, so I can get back to getting millions and buy the Lambo. As usual, you feel me? So, yeah. But on a more serious note, I haven't been doing any challenges since I failed the last one. I've been waiting for, some free time. I started a 5K challenge on the Fivers last week, and I love the Fivers. It's an amazing prop firm, at least for the spread and the fact they don't have any time limit. I love that. So I'm currently a bit in profit, 1.5%, which is which is massive improvement from what I've been doing in the past. So that's very good news. And my trading has also evolved, like you see in the title. Nothing has changed from the core ideas. I've just improved them, and I've figured some things out from the price action. Um, you see, all this started when I started losing too much using my model. It was a beautiful checklist, but it had flaws because you have to understand price action. That's what ICT teaches. So it's always been a goal to understand what price does on these charts, what's price doing at the moment, there and that, and all of that. So the evolution came as a result of just learning how to read price. So I'm going to showcase this with an example of a trade that I took, and we get a little bit into the price action. This may not be for everyone. You may just need a little bit of the things I've learned to add to your own ideas to build it up. You might find this too confusing and unnecessary. This to me is simple, and it's actually improved the way I see the chart. So this is why I do this. So take what I say with a grain of salt, go look into it for yourself, and you figure it out. Okay, so basically the logic is I'm using the 1 minute time frame and I'm swimming around 15-minute landmarks, the same landmarks that I had before, which means I come to the market with a different measure of flexibility. However, let's start with daily bias as usual. So when I came on this day, I saw this balanced price range. There's an order block. It's supposed to be down here actually. It's the down close candle. You get the point. This black down close candle, that's the order block. We hit the order block, price has been bullish. I mean, it's safe to just keep expecting price to go higher, right? If you look at the bigger picture, we've taken out these relatively equal highs, and price has filled in an imbalance. So it could also be bearish, retrace to perhaps discount of this move, perhaps take some liquidity along the way. I mean, they did engineer and take liquidity from these lows. So as far as bias goes, I'm still very bullish. Even though we've left this fair value gap here, which is why price is facing some resistance, I'm still bullish. However, with this in mind, I still don't go straight into the market only trying to buy. It guides my decisions, but it doesn't dictate everything I do. So let's look at the past price action. To this day was trash. The London session of this day was also trash. I think we had FOMC coming in at 2 p.m. or something. But yeah, the few things that I can see is price has taken these equal lows, but there's no telling the price can't come take out these lows as well. You see, that's something that I've learned to understand about price action. We say taking liquidity is smart money finding the counterparty to buy from if it wants to go high, so that's why it takes the sell side. But you never know how much liquidity price money needs to take before this event starts. That's why I developed this flexibility. I'm not gonna get too technical. I am getting technical. I don't want to bore you with a theory. Let's just get straight into the charts and let me show you what I mean. If I come on this day, the classic model would be waiting for what's it called, an imbalance to form. I mean, there's a small one here, so that's also good enough, but price is pushing up, so why don't we just remain bullish? Price does this and takes out that high before giving me a setup before coming here or creating a setup for me to be able to taking out the high of the day. Two things are possible. Price can reach for the liquidity here, here, and here. So I'm going to identify the closest, the low-hanging fruit, because we've taken all the buy stops from here. Another thing I really pay attention to is the closing price of this candle, the same candle I identified the liquidity on. I call that the rejection block. Okay, and I call this on the buy side liquidity. Okay, another interesting thing to point out is this fair value gap, this CB. So that'll be relevant in hindsight, but not hindsight, in the future. Let's just keep going. All right, so identify this CB here. You see, if I'm trying to sell, if I had a bearish bias and I see price has taken all this liquidity from here and went deeper into the fair value gap, all I'd have to do is cut away the fair value gap a little bit so I can identify the remainder of that. Go in there, find a sell setup, and sell. Let's take a look at what that looks like on the 1 minute time frame, shall we? So this is what that looks like. Okay, on the 1 minute time frame, my classic setup would be I'm waiting to see price poke in here, take out that high, and then crash lower. Time is currently 8:50, very relevant. So the moment we get this imbalance forming, I'm shorting here if I'm bearish. However, I'm not bearish. So what do? I wait to see this fail, and then I buy to the next level of liquidity. Take a look at this. If you're selling inside this 1 minute imbalance. Price gets in here. That's our fair value gap. I mean, you can target the one up here, but if you really want to get involved, this is where you get in. Price respects that and comes lower. See, I was waiting to see price come below this low. It didn't. Left another fair value gap. And then printed this big candle. See, because I'm not bearish, I'm waiting to see this leg fail, which is price coming above here, which is someone trying to sell here. I want to see their stop loss get taken. My connection just became trash. Very nice. Once this happens, I know for a fact the price doesn't want to go lower with this fair value gap right now. What does that mean? That means that I can go long because the market is not likely to consolidate at 910. See, price does only three things: go up, go down, or consolidate. Because I'm not expecting a consolidation at this point in time, I trust the small fair value gap and I go long in there. I've been doing this consistently. It's been working for me. It may not be working for you, but I trust that you check this out, take it with a grain of salt, and actually check this out. And you might find something interesting. So if I'm buying here, where's my objective? The rejection block here, which means my entry would be right in here. Well, you can see they left a small fair value gap here, so that's where I'd be going long, just like this. I promise, guys, this is just the beginning. We're gonna get deeper into this, and I'm closing the entire position or partials when we hit the rejection block, because our rejection block rejects. For me, I like to close the entire position because the order flow can definitely get disrupted and price can crash down seeking more liquidity to the sell side after it hits the rejection block before it prepares again and comes to take the buy side. So at this point, I have a bullish bias, but it's all because I was flexible to accept this setup to fail. Price picks up the order right here and then expands the rejection block. So this is another place you could have added another position. Can you see that? Respected this, went above this high, left a fair value gap. That's another entry right here. Hits the rejection block, falls short of the buy side liquidity. Now, let's go to the 15-minute time frame so I can show you something. Every time price hits an objective, I'm going to the 15-minute time frame to, reorient myself. Now, there's a few things that have happened that are quite interesting. So this same fair value gap does, oh, come on. Okay, so this CB we have here, which has been quite important for price, resistance here. See, I cut away the CB. Let's make it full again. This CB here is important to me now because we've closed above it with momentum. Now, if I'm bullish, this is another place I could look to buy. Pay close attention, okay? I promise this is good. I could buy here. If price doesn't want to go high here, what else could it do? It could retrace back into this fair value gap. Why is that important? Because it means that if price doesn't give me a bullish setup here, I can sell into this fair value gap. Another argument is it's currently 9:15. We're close to 10. If we're close enough to 10, say 9:50 or something, and I can get a setup, I can trust that price is going to at least retrace in the London close, because that's what ICT has said. If when at 10, if you're buying, you have to be getting ready to close your profits, because price retraces and sometimes comes down seeking liquidity and back into discount. And I'm not saying this because it's hindsight. I promise that I actually did this, okay? I've done this a few times for the past, a lot of times, not a few times, for the past month, and it's been working. I believe it's worth sharing, even though it's very complicated and there's a lot of moving parts to it. But I'm documenting it for posterity, and maybe you can find some value in it too. We've hit the rejection block, so what do? What I do is I wait to see what price does inside this inversion fair value gap, which means that when price comes down there, I'm waiting to see a bullish setup form. However, because of all the sell arguments I've laid in front of us, so this is 9:27, 28, 29. So at 9:30 exactly, we have another candle. This candle closes, the 15-minute candle closes, you get it? Price comes down here, and I wait for the classic bullish setup, waiting to see price take this low out. Price takes, well, we have another low here. So price took out those lows, came back down. Yes, came down here, deeper into the fair value gap, took multiple lows, closed it in completely, and then created a bullish setup. See, if I'm bullish, there's a place I can look to buy. It's not in discount, but price does not have to come to discount for the continuation of the move to happen. You've probably seen this too. So in here is a place I could go long. There's no market structure shift. I don't need it. The liquidity grab from these lows and these lows, that's all I need. But I don't go long here. Why? Because experience. See? So I'm waiting to see that fail. You can see price respects this fair value gap as well, expands even higher, and comes up. This is the previous rejection block. Let me delete this, because now we only have the buy side as objective. So now I understand that if this setup fails, if price comes below this low, the order flow is broken, and I can simply go short with that. Now I wait. So you see, instead of buying here or buying here, I'm waiting to see that fail. And the moment that failed, and you see, it doesn't just have to fail. It didn't simply fail, but it failed with displacement. It printed big bearish beefy candles, huge displacement, even took out this low as well. Now there's two fair value gaps here, one there. I entered on this one in here, so I had a worse risk reward ratio. If I entered up here, I'd have a much better RR, and I know this because hindsight. See, I took this trade and I won. So it's just me sharing what happened there. Now you just think of the profit target. That's what this whole business looks like on the 15-minute time frame. Okay, so I'm looking here. This is discount. Anything below here is discount. So that could be a profit target. However, I looked on MT5 and I saw that this low poked below this one, which means that this would be a sell side liquidity and rejection block here. Look at MT5. I'm not going to show that because my MT5 takes long to load sometimes, but just check it out. I promise you that's what was there. So I looked at the rejection block and I looked at the sell side liquidity, and I closed with that information in mind. So basically the entry would be here like this. Price picked up the order right there, and it went all the way up. So I had a lot of heat on this trade to fill in the second fair value gap, and well, it turned around. Institutional order flow entry draw. I wouldn't have added another position here because I like seeing a market structure shift. However, small fair value gap here, you can add another position here, your stop loss above here, and price crashed down. I closed majority of the rejection block as well. Rejection blocks reject. As you can see, big bullish candle. Big bullish candle means that sometimes price can go all the way up to who knows where before continuing down to sell side, just like I identified prior to this. And that's not the situation you want to be in. You don't want to watch your profits wiped out. So I closed majority of the position for like a 1 to 1.3 RR or something around that. If my entry was here, I'd have a much better trade because that'd be a 5 RR. And this was one of those situations where price actually came all the way down, took the sell side, and the order flow was still there, and crashed all the way down into the BISI here. So I forgot to identify that BISI. Because if you're bullish, then remember that's another place price can come down to. So they actually came all the way down and closed in the BISI completely. And that would have given you a much better trade if you had a much better entry. 9R. Guys, this is what I've been doing. I promise it's what I've been doing for the past month and a half maybe, and it's been working. It's what helped me through NFP week. I document a lot of the anomalies that I see, times where this logic doesn't work out, try and find a reasonable explanation, and so far it's been just remarkable to me. I love being able to see the markets from these perspectives, because in the past I would have never caught the sell trade. I adhered strictly to buys, and that can be for someone. Currently I'm flexible and it's helping. Maybe that flexibility may not be for everyone. So yeah, I'm waiting to see how far I can go with these ideas, because it's very fascinating to me that they worked. I did it many times this week. No, wait, today Saturday. Yeah, this week. So I traded on Monday, Tuesday, and Wednesday. The majority of my trades were wins. I had 2 losses, or 3 maybe. Yeah, but yeah, basically I've had a good experience trading like this. I'm just hoping it just keeps being consistent, so I can get funded and actually start making profit from trading. This is all good, but at the end of the day we're doing this for the money, right? So yeah, I want to see real results. Yeah, so I'm back, guys. I'll try to be more consistent on YouTube. I hope you found some value in this video. I promise I'm not gonna wait for another month before I upload. I'll keep sharing trades like this. Another very interesting trade where I use the 5-minute time frame. I'll share all of that. I'll just keep documenting my experiences on this YouTube channel. So please like and subscribe if you enjoyed this video. And yeah, I'll catch you guys in the next one. Bye.